This was not a quiet week. FOMC shock. Triple witching volume. Chips at new highs. Industrials at new highs. And over the weekend, Iran closed the Hormuz Strait. Again. Let me walk you through it, day by day, then where we go from here. New here? Subscribe. Free note in the description. Monday was the Iran deal rally. S&P up 1.65%. Nasdaq up 3.07%. Dow hit a record. Oil cratered below 80. The market priced peace. Tuesday was rotation. Chips got sold. Philly Semi down 5.71%. Industrials got bought. XLI, Pave, Caterpillar, all at all-time highs. The money didn't leave, it moved. Wednesday was Kevin Warsh. His first FOMC meeting as chairman. Rate held at 350 to 375. No surprise. But the dot plot flipped harder than anyone expected. 9 of 18 members now expect at least one hike. 6 expect 2 or more. The median rate projection jumped from 3.4% to 3.8%. Forward guidance was deleted. The statement was slashed from 340 words to 130. Warsh told markets, "Read the data. Don't wait for us to tell you what's next." The market sold off. S&P dropped 1.21%. Gold crashed $150. The 2-year yield shot to 4.21%. The dollar surged. But here's what was interesting. Chips didn't go down. Philly Semi rose 1.38% on Wednesday, on a hawkish Fed day. On a day the Nasdaq dropped 1.34%. Semiconductors were the signal. Someone was buying the dip before the dip was over. Thursday confirmed it. Triple witching, quadrillions in options and futures expired. Volume was massive. S&P 500 volume hit 6.3 billion shares, roughly double a normal day, and the market ripped higher. S&P up 1.08% to 7,501. Nasdaq up 1.91%. Dow finished the week at 51,065. The big story was chips. Philly Semi surged 6.42%, a new all-time high. Intel jumped 10.6% after Trump announced a partnership with Apple to design chips in the United States. Micron up 8.7%. The SOXX ETF up 6.6%. SanDisk, Intel, Micron, TSM, Western Digital, Applied Materials, ASML, all hit closing records. 7 chip names. 7 all-time highs. On the same day, NVDA bounced 2.95% to 210.69, right back at its 50-day moving average. Volume was 241 million shares. That's conviction-level buying. The FOMC dip we talked about on Tuesday? Bought. The question now is follow-through. Caterpillar hit 985.82, up 3.13%. Another all-time high. Touched 9D/4 intraday. That's up 4.3% in 2 days from Tuesday's 945 close. On a week when the S&P barely moved, CAT ran. The industrial supercycle is not a theory anymore. It's a chart. SPCX went the other way, down 3.56% to 185. It touched 172 intraday, down 10% at the low. That's 3 straight days of fading. From Wednesday's high of 213.80, SPCX is down 13%. Options mania is cooling. The gamma engine that pushed it up is now working in reverse. Russell inclusion is still ahead, June 26th. That could be a catalyst. But momentum is not your friend here right now. The week net, S&P up 0.9%. Nasdaq up 2.4%. Dow up 0.7%. S&P has been up in 11 of the last 12 weeks. That's a relentless grind. Now, next week, the setup changed over the weekend. Iran reclosed the Hormuz Strait on Saturday, 2 days after the Memorandum of Understanding was signed. The reason? Israel continued operations in southern Lebanon, and Iran says the U.S. failed to enforce the ceasefire. Negotiations are now scheduled in Switzerland, but the Iran delegation delayed their departure. Vance's team is already there. Trump said if there's no deal, the U.S. might charge tolls on the strait. This changes the oil calculus. WTI was at $76 Thursday, well below $80. If the Hormuz closure is sustained, oil spikes. That's bearish for the lower input costs industrial thesis. It's bullish for energy stocks that got crushed on Iran deal optimism. Exxon, Chevron, Conoco. And it reintroduces inflation risk at exactly the moment the Fed is talking about hikes. The base case for next week. Chips have momentum but are extended. Industrials have momentum but face a geopolitical oil wildcard. SPCX needs to stabilize. Energy gets a bid if Hormuz stays closed. What I'm watching. Chip pullbacks after the Thursday surge. NVDA at 205-208. Micron near 150-180. Intel near 125-128. Industrials. CAT at 950-960 if oil spikes and the sector takes a hit. SPCX. Wait for 170-175 to hold before considering a Russell inclusion trade. Energy, XOM, and CVX are the obvious plays if Hormuz stays shut. But these are event-driven, not structural. Manage size. Risk to the upside. Iran deal gets back on track. Oil drops. The chip momentum continues. Risk to the downside. Hormuz tensions escalate. Oil spikes above 90. Rate hike expectations accelerate. Next week, lives or dies on geopolitics. One question. Hormuz closed again. Temporary or the deal is dead? Drop your take in the comments. The market told us a lot this week. Chips are leading, industrials are grinding. SPCX is a fading gamma story. And geopolitics just reminded us it's not done yet. You know the drill. Subscribe, hit the bell. Free note in the description. See you Monday.